Okay, so let's get underway, guys. It's the hour mark. So assalamu alaikum, everybody. Good morning, good afternoon, good evening, depending on wherever you're joining us from. Today, this has been a marathon weekend on the park launch sessions. It's our fourth event this weekend. So it's been pretty busy and some really good conversations on some really good topics. So hopefully we will close on a high as well on this one. Earlier today, we have heard Hassan and Dr. Aisha talk to us about cryptocurrency. So again, very exciting topic, a very big audience that we saw. As you guys have been seeing in our marketing and other news, Park Launch has been working across a pretty wide spectrum of enabling actions and topics or areas where we could assist the budding ecosystem, startup ecosystem of Pakistan. And as we take feedback from all our community members, we recognize that the range of those topics varies from funding to operations to actual technology and talent, etc. So today we're going to talk about something which is a very real challenge, and there are a lot of questions around it, as we understand, for early stage startups especially. This is about the incorporation, all the granularities and various intricacies of incorporation that many of our founders face, and they learn about them over their journeys. And also a very operational matter of banking, because when we talk funds or when we talk operations, money has to move around, and the startup ecosystem, as we all know, is way more global. Although we are focused on Pakistan, the flow of that money, especially if you're incorporated elsewhere, is something that many people have told us they would like to get more expertise on. So we got together a couple of experts on that. I'll let them introduce themselves in detail, but before that, maybe a few words. Of course, we know that 2021 has been a stellar year for Pakistani startups. I think they're already over $300 million in fundraise. Faisal, if I'm not wrong, we've exceeded that mark probably.
Yep.
Which is.
I think we've almost exceeded it.
Yeah, so I think that critical velocity, as you guys say, we're reaching there, which is fantastic. And there's been a lot of comparison around other similar big countries like Indonesia, for example, and Southeast Asia in general. And therefore, today, as we talk about incorporation and banking in general, there will be a bit of a particular focus, as Jan and Faisal will talk to us about it, on Singapore being one of those destinations, and how has that worked out for the SEA or ASEAN ecosystem, and that's what we'll be talking about today. So we have two experts who have joined us. Jan Kessler, who's the head of startup experience at Aspire. We'll hear from him in a moment on what Aspire is all about. He has experience in management, strategy, business development, and marketing. And he has worked, as I'm told, in a variety of different big cities: Paris, Thailand, Indonesia, and Vietnam. I think today he's joining us from Bangkok. And we have Mr. Faisal Aftab. He needs very little introduction, especially for all of us who are attached to the Pakistani startup ecosystem. Faisal is well known, especially in the VC circles. He's the founder and managing partner of Zayn Frontier Fund. There are some very big names in his portfolio, and I'll let him actually talk about them briefly, but I understand Bazaar, KTrade, Savyour, GrocerApp, just to name a few. And we will be actually, the idea here is we look at a service industry expert along with a senior VC who can actually, give us different perspectives, and then our startup founders can use some of those perspectives to build together a picture on how they can get ahead of the curve when it comes to things like incorporation and banking. Many of them have faced issues a little bit later in their journeys, as we'll discuss briefly. So without much further ado, maybe we'll go to Jan first. If you could briefly introduce yourself, who you are and what you're working on, and then I'll come to you, Faisal. Jan.
Cool, thanks, Amir. And hi, everyone. Really excited to be here, and really excited as well to help the Pakistani ecosystem. I think in the last few months, we've been working with a lot of startups in Pakistan, but always very happy to hear more and to help the community. And so what Aspire does is, or our vision is really to become an all-in-one financial operating system platform that will help CFOs and funders to basically better manage their spend, better manage their time, just by automating as much as possible all their financing needs. So it's basically to link the banking and the software. So today as a CFO, you need to work with different software as well as different banking partner. And for us, the idea is basically to create one. So that's what we aim to do at Aspire. I'm Jan, so I'm leading the startup effort at Aspire across Southeast Asia and even Asia Pacific. In reality, it means I'm leading the sales and the BD team, right? And who is Aspire? Aspire is a Series B company. So we raised $200 million so far. We've been born in 2008. So we're a YC company. We just did our Series A, we did our Series B in September, and our lead investor today is Sequoia. So we're becoming very aggressive in Asia Pacific with a strong focus on Southeast Asia.
Thank you, Jan. Faisal, a bit about you, your focus areas and Zayn Capital, the new big kid on the block, please.
Sure. Thank you. Thanks for having me. Also, it's really a pleasure. Jan and I have been working a lot together, so it's finally nice to be on a panel with him as well. So enjoying that. So I'm Faisal Aftab, co-founder and managing partner of Zayn Capital. Zayn is actually a platform fund where there's 3 dedicated funds. So there's my fund, which is the Frontier Fund, with a $30 million under management that we're effectively deploying in Pakistan entirely. Focus is seed, pre-seed to all the way up to Series A. We've actually done about 12 deals so far, of which I believe about 8 have been announced, and the balance 4 will be announced shortly. Some of the rock stars of that portfolio are Bazaar, KTrade, Taza, PostEx. Some of the new entrants are Savyour, Scribe Audio, Crave Mart. So just building up the portfolio as we go along. And of these deals that we've done, we've actually led a total of 4 Series A rounds in Pakistan. So we're also trying to add some momentum in the subsequent side. On the other side of Zayn Capital, we have a fintech fund that's more regional focused. It's MENA, Pakistan, Bangladesh, and opportunistically in the UK and Europe as well. That's headed by my peer, Faisal Chaudhry. And then we have another debt fund as well that'll be getting announced very shortly. So it's about basically the idea is to give the full spectrum of support to startups once we come in. I'll give the floor back to somebody else.
Wonderful. No, thank you, Faisal, and it's great to welcome you back on one of our panels. And I'm hoping that you guys will help me out a bit as well as I sort of broaden the discussion and try to zoom in. We are also hoping for some good first-hand questions from the audience as well. But if you allow me, I'll just take a liberty and start absolutely from the fundamentals. A few naive questions, if I may, and then we'll go deeper into specifics. So Jan, maybe I start with you. Definitions, right? So could you just briefly educate us, especially our new founders, on when we use this term incorporation, right? So of course not in the Pakistani context, but in general, as you look to serve this this ecosystem, how do you define a holding company, a subsidiary, and if you have whatever knowledge limited or otherwise you have of the Pakistani ecosystem? Just let's put out a couple of definitions, right? When we use the word incorporation and somebody is very new who's just starting with their venture, what is the difference between these two? And I'll come back to Faisal also to give us the same definition from his perspective.
Cool, thanks. So the operational entity is basically the entity that you use to operate your business, right? So most of the startups in Pakistan, they will first open a company in Pakistan, right? Get a product live or at least start the business in Pakistan before thinking of incorporating a holding company. If you're a startup, usually that terminology of holding company comes a little bit later on in the game, where your investor usually will ask you to have a holding company that might be outside of Pakistan to inject capital. But basically a holding company is what you can think is the mother of your company, right? And you can have different entities that are all linked to that master master entity that you have.
Okay, very clear. Faisal, would you want to make any quick build on it? Because I'm coming to you in a minute with taking a purely investor view on this.
Yeah, sure. So the holding company is the critical element in terms of flow of capital into Pakistan. This was luckily allowed, mirroring of cap tables was allowed, as Jan mentioned. You originally had founders would only be able to incorporate in Pakistan. Now that they've allowed mirroring of cap tables up in holdcos outside, that's what's actually one of the things that's unlocked a lot of capital coming into Pakistan. The main reason is there's capital controls in Pakistan. While it's not officially said that the capital controls are there, but the reality is in the past, when some of the big investors, like even DFIs like CDC have invested in companies like Daraz early on, when they had an exit, the state bank sat on their money for almost about, I think, 4 or 5 years while it devalued in rupees. So effectively, this has actually been a game changer for Pakistan. For me personally, when I look at it, I think out of the 14 investments that we've done, I want to say 12 are incorporated in Singapore. And they've all gone, I mean, there's been a one-stop shop with Aspire to effectively set up the company and open up a bank account. And I can dive into what their use case is, but at the end of the day, it's in an OECD and FATF world, it's extremely difficult to open up a bank account for a holdco. And it can take up to anywhere from 4 to 6 months. And at that time, it can end up being a rejection even. So Aspire has really solved a key problem for these startups where speed is needed.
Wonderful. And we'll come in a minute, of course, for Jan and Raj to help us elaborate on how they solve that problem. But you used a couple of very interesting terms, Faisal, and I'll remain in my student, the naive area to dumb it down for me a little bit. You used the word capital controls. You gave us an example where at the time of exit, the movement of money, repatriation of money out of Pakistan became a bit of a challenge. And therefore, having that holding company or a cap structure, which could be held some of it outside, has built investor confidence, or has it eased the operational element of it? So how should one look at it, or is it a combination of both?
So it's a combination of both. I mean, the key thing for a startup, basically the rocket fuel, is the money. And so there's only so much money that's domestically available in Pakistan. While there was a significant amount of interest or curiosity, I would say, in Pakistan, at least even in 2019. Technically, it was illegal for anyone to incorporate a holdco without applying for permission to the state bank. And so the process would effectively take like 6 to 12 months, which is a non-starter. So a lot of founders, effectively took the risk, which they had to. That's the business we're in. You have to take risk and incorporate companies abroad. Luckily, with all the industry working together, everybody lobbied, and the state bank did understand that this industry is very different than traditional brick and mortar. And so they've allowed this mirroring of the cap table. So now effectively, there's two elements of it. One is obviously money comes into the holdco. You want that money to close very quickly. And so I'll give you an example. The pace with which rounds are moving now, especially as these companies are scaling. I did a couple of pre-seed rounds in August. They raised their subsequent round literally in October, and now they're on their third round, just because the speed it's like the fuel constantly to keep growing. And so having that set up in a holdco, first of all, gives into international investors security on multiple fronts. One, the holdco invariably has the IP rights. That's enforcement of those IP rights is extremely important. In Pakistan, I think there is still a bit of a trust deficit in the legal system in terms of the ability for people to get stays relatively quickly. So it somewhat circumvents that component when all the rights are sitting at the holdco level. And then obviously you can also exit your shares out. So this changes based on your tax residency status. So now if you're physically present or you're tax resident of, let's say, Pakistan, then you would have to repatriate the capital back to Pakistan, but that is not the case for 90% of the investors. In my case, I'm technically a tax resident of Pakistan. So yes, from any gains I have from my venture capital fund, I would bring those to Pakistan. But as far as the entity itself and the investors that are international in the fund would actually get paid outside. So similarly for a holdco for a company, when you exit a company or you do secondary market share transfers, it can be settled in USD, and instantaneously it's a transaction that's immediate settlement versus state bank approval. So that's the big game changer in this setup.
Understand. And again, I'm going to come to investor class back to you, Faisal, but I'll switch over to Jan in a minute. Jan now. The way Faisal defined this recent evolution, Jan, about in Pakistan, this regulation sort of becoming more suitable and founders, earlier 6 to 12 months just for a permission, and then taking a risk if they establish outside. Now it's a bit more facilitated by regulation. In your experience, as you look at the rest of Southeast Asia, let's take Indonesia as example, because that's quoted quite frequently. It's a few years ahead of us on that evolution curve. Is it commonplace for emerging markets to go through this regulation following where industry goes? Or as Faisal was describing it, you would say it is somewhat unique to Pakistan, things like trust deficit, things like regulation being a bit outdated, and money finding it difficult to flow both ways? Or is it very common for another country like Indonesia, for example?
Okay, so if you take the example of Indonesia in particular, I mean, the dream of every Indonesian is to live in Singapore and to have a bank account in Singapore. So they will actually all go always to Singapore. But if we actually take Southeast Asia as a whole, most of the startups, I would say, are incorporated in Singapore, just because of the fact that it's a very easy place to do business, to incorporate a company and try to attract funding, right? And as well as for Southeast Asian business, going to Singapore is basically the next step when you want to go out of your country, right? So most of the startups in Indonesia definitely are incorporated in Singapore. And this is something that they look at. I think for Pakistan, at least from what I've seen so far, the question arises more about where should I actually incorporate my company, because Singapore is a little bit further down the road than, for example, a place like Dubai, or they hear a little bit about the States, right? So let's take the example, for example, of any YC company. So if you go through the YC program in the US, and I saw that Abi in Pakistan is a YC company as well. Basically, they advise you to incorporate in two places. One is Delaware, and the second one is actually Singapore. They used to tell you Canada and Cayman Island. Cayman Island really depends on what type of product you're building. If you're building, I would say, a traditional startups in a sense, usually it's going to be Delaware or Singapore. So most of the startups in Asia Pacific will tend to go to Singapore to actually incorporate the company.
Understand. And Faisal, if I come back, just building on Jan's point, of course, there's so much activity as different startups are. There's heavy deal flow, and we are in Park Launch also. We have a pretty healthy pipeline of very new startups coming in, which eventually will be going into funding rounds, etc. From your prior experience, I mean, you just mentioned that a big chunk of your current portfolio companies are incorporated in Singapore. But let's say, someone like me who's relatively new to the ecosystem, I've heard, as Jan was saying, Delaware, C Corp, or Cayman Islands in some cases being mentioned more, or maybe that's that traditional idea that it should be in the US. How do these ratios work, and how come your portfolio companies have such a high proportion of Singapore? Is that your own preference, or is that just sort of coincidental? Because we do want to sort of lay it out for our audience as well. How do some of these compare? I mean, does it really matter that much? And if so, other than the reasons that Jan mentioned, and in the next question, I will request him to elaborate, how do you guys look at these, as investors, as VCs? Do you insist on this, or is it purely sort of a league table, preference-wise?
Sure. So it's really driven by investors. So not necessarily me per se as the first check in a company, but really by the international investors that are going to bring in the incremental capital. So the comfort zone is actually either Delaware or Singapore in most cases. I would say almost 96 to 97% of the cases, and especially like Y Combinator will actually demand that you incorporate in one of these two places in order to get into the program, which makes sense because if you want subsequent round investments, look, it's also linked to FATF, your status with the FATF. So if you're on the gray list, so for example, my fund is a Cayman Island fund, with the holdco of the fund actually sits in Singapore. But if you're in a gray list country, the investor confidence to come into that country is a lot tougher. So typically, for example, DIFC, an ADGM in the UAE were jurisdictions where a lot of companies were incorporating, but Dubai itself had been, or UAE itself had been facing certain, sanctions from, not sanctions, but certain restrictions from FATF. So it's becoming, again, really, really tough if you set up there to get incremental investors. Even Cayman actually literally is up for review. So all these jurisdictions are actually coming up for review. The only issue with the US, which is why I think even Y Combinator lacks, is the very cumbersome reporting. So I'm actually a dual Pakistani American. So I'm subjected to tax reporting, which is at a level that I think probably 50% of my year spent reporting taxes in both jurisdictions. The US has something called PFIC reporting, which can become extremely cumbersome if you have certain institutional US investors, for example. And so many times, then the tax laws are also very stringent in Delaware. So for example, if you have European investors, non-US investors, that can cause a bit of an issue because there's withholding taxes and all sorts of stuff on dividends that can make it a little bit painful. So Singapore has been so far the most friendly jurisdiction, where basically the tax consequences at a holdco level aren't effectively, it's neutral to everyone, right? So you're not subjected to taxes in the jurisdiction where you're incorporating the holdco. So that's been, I think, the main driver of this entire equation. And I personally recommend either Singapore or Delaware to investors, to founders. The reason being because I know what's going to happen in the subsequent rounds.
Very clear, very clear. So I think it's heavily driven by investors' own perception, point of view, whatever it may be. But what happens if you got a potpourri of investors, right? So somebody who prefers to be in the US, another one who prefers, I don't know, you get a couple of MENA funds and they wanted to be in Jebel Ali, or if you have somebody in Singapore, is it common or is it even recommended for startups to have multiple subsidiaries? I mean, they can't all be holding companies, I believe. So incorporation wise, is it common for companies to have more than one location beyond their operating company in their primary market, just to appease the investor and facilitate their flow and their taxation?
Yeah, so I mean, look, you go with the lead, right? If the lead is like STV and they're writing you a $15 million check and they want you to incorporate in, let's say, somewhere in the GCC, I think you go with that at that time, right? But generally, I think everybody's willing to come into Singapore and Delaware. They're kind of the two pillars of where investments are going at this point. And it's not. I mean, so you're only going to have one holdco. You're going to have multiple operating companies. So let's say I'm a B2B startup and I'm in, let's say, multiple jurisdictions like Egypt and Saudi and Pakistan. So I'm going to have one holdco where all the investors come in, and then effectively I'll have three separate operating companies in three jurisdictions. But holdco can only be one. So, that's where the shares are.
Clear. There's an interesting question from Khurram Bhai on the chat, but that's sort of coming in our flow later. Jan, coming back to you. I mean, clearly, you guys have made the case about Singapore being more neutral, and we've heard about it being, in that Asia, the financial hub of Asia, along with Hong Kong. So it's not a big surprise there. What does it really mean in the holdco context? So a very early stage startup, they've made their holdco in Singapore, and the investor money has flown in. What does ease of doing business, number one, and tax implications, these two aspects sort of be, they are called out more frequently when we favor a certain destination to make a holdco. What do they really mean on a day-to-day for an early stage founder? What is ease of doing business? And when do tax implications really become important or meaningful in their normal startup journey?
Okay. So in terms of ease of doing business, right, I think the first question that I will ask myself is, okay, I'm a founder, I want to create a company. How long is it actually going to take me to open that company, right? In Singapore, the answer is 1 day, right? Within 1 day, you can open your company. So within 1 day, you have your own company in Singapore that is working really well. So that's the first point. The second part is actually, okay, if something happened to my business, how am I getting protected, right? And I think this is why a lot of founders actually today, or a lot of VCs, want those companies to be incorporated in Singapore as well, is, okay, if something happened legally, what can I do against these startups to try to get my money out, right? Singapore, very equal country. So there's a very high chance that, if I'm right, I will win. So this is very important for both, I think, investors and startups. Talking about tax-wise, it's actually cheaper in Singapore than in the US. So in the US, it's up to 21%. In Singapore, it's between 0 to 17%, right? So that's another reason actually why a lot of companies are moving to Singapore nowadays.
Understand. And when we say tax, like 17 or 30, whichever it is, I mean, from what I've understood, when you're an early stage startup, you're mostly in your fundraise and spending mode, right? Your P&L is likely to be read for some time to come because you're
correct
keeping it. In those years, is tax an important number, 18 versus 30? Of course, later on it will be, or is it really when you are exiting or when you have to report those earnings? I mean, when does tax become accounting-wise an important number for startups?
I mean, usually you don't pay tax after several rounds, except if you're doing really, really well. So I hope Faisal company are going to do really well. But basically, it doesn't really happen before at least, I would say, Series C, Series D, usually. Main reason is because until then, you want to make sure that you have enough cash to basically pump it into the business and to grow your business. And profitability only arise at Series C, I would say, at least from my perspective, right? For what I've seen in the market. So tax-wise, until Series C, D, not really a topic, I would say. Main reason is because the funding is going to go through the holding company. So let's say Singapore in this case. And then the company will send us funds to Pakistan, but do an intercompany loan at 0.01%, for example, right? So they will basically send free money to Pakistan. So there's not going to be anything to pay taxes on it.
Understand. Okay, very clear. But in any case, holdcos are not for a year or 2 years, right? The whole idea is that that becomes your legal entity structure over a long period, so you keep one eye on the future. Anyway.
Correct.
Hopefully you do well, so it does become a good problem to have. Faisal, an interesting question from Khurram Bhai. He's asking if your exit strategy is an IPO in Pakistan, then how does this holdco, a foreign offshore holdco structure plays out? Does it complicate things I mean, it's just, how will the exit look like then?
Yeah, so I mean, that'll be interesting when that happens. I mean, right now, I mean, Pakistan, not too many tech IPOs have happened, at least from a platform perspective, right? So you've got more of like the TRGs and the Systems Limited, I think, are the only two traditional tech plays that are listed on the Pakistan Stock Exchange. But it will complicate things. But look, it's let's put it like this: if you don't create the whole co, your actually likely exit option is going to be only listing on the Pakistan Stock Exchange. But if you create the whole co, then it can be in the form of a SPAC. And I actually think SPACs are here to stay, where you're going to see lots and lots of liquidity in that manner. So it really just comes down to what the strategy is. Even when it comes to an acquisition, let's say, if it's a there is a global consolidation going on where big tech is doing growth by acquisition. They're driven by their publicly traded stocks in their respective markets. So they would prefer the holdco. SPACs would prefer the holdco. But if there's a massive IPO opportunity, which I do believe is going to happen in the next like 2 to 3 years, because there's a lot of domestic demand, you can always restructure the company. I mean, it depends on what the exit is, right? If it's a massive $1 billion exit, get some high-powered tax lawyers and make that happen.
Fair enough. Okay. So talking of SPACs, I think I was reading in the news was a couple of days ago, Grab guys, I think they did something similar, right? So I think that was done on the New York Stock Exchange, if I'm not wrong. It's Southeast Asian startup.
Correct, so yeah.
All right. I think there are a lot of...
I can tell you one thing. One of my portfolio companies from my fund one as well, that's in the new fund, they were actually offered an exit from one of the SPACs. So it's happening even in Pakistan. I can't name the SPAC, but it was a multi-billion-dollar SPAC. So there's a lot of interest level in Pakistan for SPACs.
Okay, wonderful. All right, we do have a couple of interesting questions on these lines, but we'll loop back. Now we just make a small pivot here and move into the much more operational aspect, which is banking. So you have done your holdco. You've done it in Singapore or Delaware. You use a company like Clerky. If you're lucky and you have an American citizen founder, then it gets done faster. Otherwise, it takes a few days. Now comes the interesting matter of a bank account, right? Because that's where the money will come in. And this is where I think we're talking Jan Aspire's core area. As a fintech, you guys are facilitating that. Could you tell us a little bit more? Number one is how long does it take? How fast do you guys do it? What's happening behind the scenes? And the second one is, could you also do it for people who are, for example, not registered or not incorporated in Singapore? So 2 parts to the question, please.
Cool. So thanks a lot. So basically, when you open your holding company or any company in Singapore, right, the next step is how am I going to open a bank account, right? It's great to have a company, but I need to get paid and be able to pay, right? So you have the choice today of going through the traditional route in a sense. So you will go through the DBS, the OCBC, which are the big traditional banks in Singapore. The issue with them is that their process is that if you want to open a bank account with them, you have to be physically present in Singapore, right? So at the beginning of the pandemic, it would take them roughly between 8 to 12 months to open a bank account remotely. And you had to pass probably between 4 to 10, I've heard horror stories, 4 to 10 interviews with the bank online on Skype and provide tons of documents, right? And that's when we came in about like 3 years ago and we started to launch our neobank product back in the days. So basically a digital banking. And with us, it takes about 5 to 10 minutes to open your account. How is that possible compared to the traditional bank is basically when you open a company in Singapore, you have to register your company to a governmental website. Through an API, when you actually open an account with us, we just plug the application through that website and we just extract all the information from your company. So copy of ID, pretty much everything that you already shared with the Singaporean government will go through us. And that's why we're able to approve anyone like 5 times faster than anyone else. But the fun story behind it is that behind us is DBS, the biggest bank in Singapore. So we use those guys, our custodian bank account. They take about 4 to 6 months to open an account. And with us, it's about like 5 to 10 minutes.
Now, I can speak firsthand on how difficult it is to open a bank account in Singapore. When I moved here, I had the company letter and everything. It still took me 2 months to get an account because they wanted my bank statement from another account in Singapore to open the first account. So it is quite strange, you're right. So which means you've found a way through your virtual bank, through your digital bank to solve that problem. But you mentioned something about an API, which means you're directly picking up data from wherever somebody has incorporated their entity. But it is still, when somebody comes to Aspire, you guys have partners in Singapore who would facilitate opening of an incorporation of that company as well. So Aspire doesn't do it. If I'm not wrong, you guys will refer the client to a partner who would similarly, help incorporating a company also in a very short time, if I'm not wrong. Yeah. Could you just say a bit more about that part, please?
That's right. Yeah. So Aspire is that all-in-one financial operating system platform, but we do the incorporation as well for our clients through one of our partners, but it's done through us, right? So we can help founders from the day they actually launch their company until they exit. So Series E, ideally.
So is it a one window operation, Jan, essentially? Like, do they deal with your contact or they just sort of switch between 2 people, one for banking, one for incorporation?
So the way everything is seamless, you can do everything online, 100% digital through the website. Again, the incorporation takes 1 day, right? So basically you just need to fill out the form, tell us what's the name of the company, what do you want to do, which type of company you want to create. And then someone from our team will actually reach out to you. And then as soon as you have the company that is open, automatically you will get an Aspire bank account for that.
All right. And then in theory, the bank account is open. The investors have sent their money, remitted their money to the holding company's bank account in Singapore. What can we expect now in theory? Because in a minute, I'll ask Faisal from his portfolio companies how much that theory meets in practice as well. Let's taking Singapore into account. So now the money is there. It needs to move to Pakistan. What happens? How fast is it? Should they expect any difficulty? What about agent banks? When you're doing in foreign currency, and is it only in SGD or USD? Just explaining how the remittance part would work from the new account down to their operating company in Pakistan.
Okay, so today for us, we have 2 currencies, so SGD and USD, right? We're launching Euro and Pound in early Q1 as well. So usually anyway, startups will actually raise capital in US dollar, right? So the funds will come in. It will take between 2 to 5 working days, I will say, for the funds to come in. Once the funds are on the account, usually what most startups will do is send that money in tranches to Pakistan. So they will technically not send everything in one shot. They will send like on a monthly basis, on a quarterly basis, a certain amount to Pakistan. Now, the only limitation that arises quite often is that there's no way for you to send the funds in Pakistani rupee. You have to send those funds in US dollar. right? So the local bank in Pakistan will either accept US dollar or right away convert those funds in Pakistani rupee, right? But from Singapore, you cannot convert on behalf of the client, unfortunately, not yet. We're working on it. But that could be a way for any startups to actually save a lot on FX, because I would assume that the banks in Pakistan will take a very juicy margin on the conversion rate.
Very clear. So Faisal, I mean, this is of course in theory, right? So it means there might be an Asian bank that does the conversion, or a bank in Pakistan, either they have a USD account if they're lucky, or it comes in a PKR account. What I wanted from you, and it could be an actual incident in your experience, and it's a mundane subject, right? We're talking banking in a world where we could be talking tech or crypto, like in the previous session. How practical is this problem? Like money coming in even from outside, and then this Singapore thing that, as Jan described, and you're working with Aspire firsthand. Is it really as smooth as it goes? Just to build the confidence of some of our audience, because obviously money not coming in is literally detrimental to the operation sometimes in Pakistan.
No, so I actually think it's a pretty important question. I think in the topic that we're having today, because banking is becoming a major issue on the planet, and I think the fintech layer is kind of helping banking catch up with the velocity of technology and the speed of markets. I think the way they've turned in this day and age. From a practicality point of view, I can break it up into two components. So my funds account is in the US. In Cayman, you're allowed to hold accounts everywhere. So it's easier for me to set up a US-based account. So typically when I'm sending a wire over, it's actually better than what Jan is saying. It hits literally within 24 hours at the holdco level. And so they're at the holdco level, the startup's account is credited. Now, sending it to Pakistan turns into a slightly different animal, just because of the questions that are asked by the bank itself, which is part of their responsibility to ensure that any transaction that comes in, identify what the actual source was, which is supposed to be a SAR, or suspicious activity report. Unfortunately, the bankers aren't very well trained in Pakistan, so everything looks suspicious to them. So therefore, sometimes they'll flag transactions here and there and ask for supporting documents, which can delay the process. There is a tendency of Pakistani banks to also, and I've encountered this in previous businesses in Pakistan also, when they see dollars come in, especially let's say when a startup doesn't have a US dollar account, so it's coming into your, let's say, a big bank's Pakistan rupee account for the startup in Pakistan, they like to make money on the float. So they'll actually collect it and sit on it for like at least 15 days if they can, unless you kind of keep following up. And I mean, we have a lot of currency volatility, and the dollar is pretty strong against the rupee. So they try to use that to their advantage. So those are some of the things I typically give founders a heads up on these type of things. Once you know about it, the banks are less likely to play with your incoming wires. But that's just the nature of how business is done locally as it's maturing and evolving. But in practicality, I mean, I don't think I've had any startup really get stuck into any long-term issue of getting credited. Maybe the first time you send a wire, there's some questioning. After that, once the paperwork is resolved, then it becomes a pretty streamlined, smooth process between the holdco and the opco. So far so good.
Very clear. Thank you.
And maybe Amir here, just to share an example as well, because we recently raised our Series B, right? And one of our investors was from the US. He sent the funds, and they got stuck during over a month. So during over a month, we were not credited by the funds just because the money went to a different banking network, and it was hard to locate. The good thing is that, I mean, money is never lost when you send money on a wire, but it took us over a month to receive the money, even in Singapore, through one of the most legitimate bank in Singapore, right? So it can happen, delay can happen, but most of the time it's relatively smooth, I would say.
And I think one of the purposes of what I really like about these examples is, so we have a small syndicate, and I'll just share a personal example where we invested in a couple of early stage startups, one of whom had a holdco, in fact, in Singapore, and the other was just operating out of their company in Pakistan. And I think I pretty much sent everything other than my blood group report to clear that money in Pakistan, because they wanted, and probably FATF also plays a part in all these different regulations. But what is interesting is what you said, Faisal, that it's an arbitrage opportunity if a cunning banker is in the middle. They try to use that money and make some more out of it. But as long as you know, which is one of the purposes of such sessions, is founders or their team members can sort of get ahead of the curve and anticipate those challenges once you have fixed your upstream. Jan, I have what we may call a very even more mundane question. Made a very good case for Singapore. How much does it cost to incorporate a holding company or a company in Singapore? And then how much does it cost for us to maintain a bank account over time? Just if somebody was doing their cash flow budgeting because they're still in bootstrap stage.
Okay, so to incorporate a company in Singapore, the cost is about $2,000 per year. So relatively cheap, I would say, especially if you're raising several millions. Then it really depends if you're basically launching a very established company that has a very complicated shareholding structure and so on. It might be like slightly more, like 3 or 4K, but it's very affordable, right? Very easy and simple to open a company in Singapore. So about 2K, I would say US. Then to answer your question in terms of opening an account, for example, with us, we don't charge our clients to open an account, right? And this is not how banks are making money anyway, right? Banks, how they're making money today is basically when you send funds from one currency to another. So they make money on the FX rate through credit when they actually lend to their clients. And the third way is any times they actually use the card, right? In terms of card transaction. And the way we operate is that, for example, we use different partners for everything, right? For our cards, we use a very specific partner in Singapore. For FX, we use a very specific partner as well. And that enables us usually to be the cheapest in Singapore, but to be 100% digital. And that's why most of the clients and most of the startups today are just using us as well.
Understood. Okay. We have a question on those lines, still operational domain. If you have a Cayman domiciled LP or a GP fund, can they open a bank account in Singapore?
That's actually the exact structure of my fund. And Jan opened my holdco in Singapore. So which the holdco for the GP. But the account itself for the fund for the GP and LP, it's extremely difficult to open in Singapore because Singapore does not do like effectively unless you have, especially for financial institutions. So the bar is actually, if for startup, the bar is here. For any financial institution, the bar is all the way up here. And so they just I remember I was trying to actually open my account in Singapore and I got a big no from like pretty much every bank, even though I have some strong relationships with HSBC, even they rejected it. They said, no, absolutely not, we're not going to do this. So the best bet is to actually work with, and I can, I'll actually say it here, since this is Khurram Zafar from 47 Ventures, I take it, right? So since I know Khurram, so I can just say it right here. I'll connect you with First Republic. They're actually pretty good with this stuff. They're in the First Republic in the US. So it's actually easier to open an account in the US than it is in the rest of the world, being offshore.
Okay. Anything you want to add to that, Jan, or we're happy with Faisal's?
So today, to actually open an account with us, you have to be incorporated in Singapore. But we're working extremely hard to make it happen and enable it for pretty much like anyone in the world. That could potentially happen in the next 6 months, which would open a brand new market for us in this case, and for basically all the clients and all the startups in the region.
All right, thank you. Faisal, we have an interesting question, and I'm just in two minds whether to put it out there or not, because it almost sounds like we are using the forum to endorse one commercial institution or another. So please answer if you think it's right, or we can take it offline for Bilal later, who's asking. With all that we described, are there certain banks in Pakistan which are better than others in this area, customer service-wise, let's say, a bit more reliable?
So I can talk about banks that I've dealt with, because I changed accounts here and there for my own personal company in Pakistan. The ones I've found to be more fluid with international capital, I have a software export company that I've had for like 10 years in Pakistan. So there's a lot of international remittance that comes in. So they, let's see, Alphala and Standard Chartered are the best two. The only problem is if Standard Chartered won't open your account if you're a US citizen, just because of they have some rule from somewhere where they got dinged back in Dubai or something. So For me personally, I couldn't open the account for the company. Initially, the company account was there, and then we had to move it to Alphala. They've been good, these two. I'm sure HPL is equally good as well. I would go with one of the big 2-3 banks that are somewhat savvy and have better settlements than others.
Understood. Okay. And again, I mean, we are not endorsing one over the other, but I think this experience is exactly what Bilal was after. We have one more question from Etisham. He's saying that they have incorporated in Canada because they have one co-founder who's there, and they are expecting investment to be there, but they also have, they want to bring some of that investment, which is made to the Canadian company, to fund some of the operation in Pakistan, as I've understood. And also they might raise some local funding from Pakistani angels or institutions. Again, I'm trying to contextualize the question. What will be the best way to do that? Now, if I've understood correctly, I think you probably go to the holdco subsidiary structure where money could move from one to the other. But over to you, Faisal or Jan, how would you just, a quick tip on how this would work if he has one company there and one in Pakistan?
Sure. Jan, you want me to take this?
Yeah, go ahead. I think it's more suitable for you.
Sure. Okay. So you're spot on. It's the holdco opco structure that you'd want to do for that company. So basically the Canadian holdco would open up a local operating company in Pakistan, and that's it. And then again, it's the same thing that you send a loan from there to Pakistan as you're borrowing funds. In terms of raising money in Pakistan, so now individuals in Pakistan can't really send money out to invest at the holdco level. So what you do there is then it's a complex structure where you basically take money in the opco and then mirror them up to the holdco, which is what the State Bank has recently allowed. So effectively that money would never end up in Canada if that's where the holdco is. It would actually be given directly to the opco. You would issue shares to those investors, and you have to do this complex complication between the holdco and the opco. So let's say somebody's coming in to take a 10% stake in the company from Pakistan. Let's imagine that they would have come into the holdco. So it would have now been a 90-10 split. So now what you do is, since the opco is 100% owned by the holdco, the opco would first turn into a 90-10 split, and then you would mirror that up to the holdco. So that's the best way to do it in terms of if you're getting money from Pakistan.
Understood. Very great.
I hope that wasn't too confusing. It sounded like a bit of a tongue tattle.
So I mean, of course, I mean, for somebody who's at an early stage, some of these things can feel a little bit daunting, right? Because of course you describe it based on your experience, and you have all that experience and skill with you. For your companies, Faisal, the ones, especially the earlier stage one, because you said you're from pre-seed to Series A, if I'm not wrong, as you introduced early. How early do you start checking these things in your due diligence when companies come and pitch to you? At what point does this become quite critical for you to have it in place before you will commit money from your fund?
So typically in a discussion, that's one of the first, once we become interested in the company, one of the first discussions is, hey, are you guys open to a holdco? Because that's for me personally, my fund, I can only invest in holdcos. Only in certain situations I can come into SPVs in Pakistan if a company doesn't want to go to holdco level, but we prefer not to do that. So, and typically most founders are open to it. In fact, I think it's kind of a foregone conclusion for founders that they have to incorporate at a holdco level at some point. Then it just comes down to basically us guiding them. And I don't advise them to ever start the process until they have a term sheet in hand, right? Because they don't want to be, I mean, even if it's a couple of $1,000s, it's a lot of money for a lot of early stage founders. So, and I'm talking about obviously pre-stage companies in Pakistan. So most of the ones that have incorporated recently, all of them effectively, once the term sheet was there, our term sheet was there, we said, okay, let's start the process and get the structure going. There's actually a couple of good lawyers that actually worked on the legislation in Pakistan, and I can name them. I mean, not because there's no promotion here. It's just my experience with them. One is Emma Lazaire, the other is Mubarak Siddiqui, and the third one, she's slightly costlier because she works at one of the top law firms, Hadar Mota. Her name is Zara. So these are the three people that effectively can help you out quite a bit in understanding locally how to structure the whole opco holdco structure.
Excellent. And Faisal, while we are still on that topic, you used the term sheet term here. What about even the early stage? Let's say there's an angel round happening, right? So now we just, from the founder perspective, it's very clear. But many of the angel investors, they are not as evolved or as sophisticated when they are committing money. There would rarely be a term sheet. They would normally listen to a pitch. Ticket sizes are small, and they would go with, in most cases, random valuation, discount, kind of 2 key numbers. Is there something you would recommend for people who are trying to upskill themselves as angel investors, because they cannot become funds themselves? How could they also play a part in making sure that their founders, even before pre-seed, are ready? What would be the equivalent of a term sheet for that stage or for those kind of investors?
Yeah, so look, at an angel level, I mean, let's say you have a syndicate, right? So you can put together an SPV and then just come into Pakistan. Let's say you create an SPV in Delaware, an LLC, and then all of you pool capital and drop that money into the opco in Pakistan. So my advice is always that, if it's once you start generating revenue and you start having financials and bank transactions, at that stage, it becomes a little trickier, because then when you go to the holdco, it's a little bit, the process is slightly different, right? Because now you have revenue. But if you're at an ideation stage and an angel investors coming in, I mean, honestly, spending even like $3,000-4,000 at that time is a lot of money that's going away from growth, right? For extremely like angel level founders. But the earlier you get started with the holdco structure, the better off you are, in my opinion, just because it's a clean slate. So, and I think you were asking about the term sheet. I didn't understand what the term sheet reference was. Could you repeat that part?
Yeah. So on the term sheet, I mean, you mentioned was that from as a VC, unless they have a term sheet in hand, I think that's when they should start investing behind those capabilities, right? That's how I understood your point.
Yeah. So that's just my personal. I mean, that's me, because I feel bad for the founders. Let's say, like, so typically we're the ones issuing the Zayn. We're the ones issuing the first term sheet. So usually when I'm ready to give them a term sheet, I'll say, okay, I'll start making introductions to different people to get the process going. But I tell them not to pull the trigger until I've signed the term sheet, because I don't want them to be out of money. So basically, it's just a personal level thing, that the way I advise them.
Got it. We have one question from Mr. Zafar Alam. He's asking, is it better to open an operating company in the special technology zones in Pakistan from a tax and banking perspective versus, the SECP, I believe? I think that's the comparison.
Yeah, so I actually worked on the legislation for with Amir Hashmi and their team for the STZA. So a lot of that is designed for some of these issues in Pakistan. So you have to treat them as like an EDGM or a DIFC effectively. So the tax benefits are there. From an OPCO perspective, you definitely want to go into the STZA. In terms of the holdco, I think that's still, it remains to be seen. So I mean, if I say it in all honesty, I would say, okay, set up your OPCO in the STZA, but set up your holdco abroad for now. Just because, we'll see, because many times these rules come out in Pakistan and then suddenly there's a change in government and things get changed all of a sudden, right? So we'll see on the holdco level. But eventually the end goal is that basically even the holdco level, holdco can be set up there and there's 100% repatriation of capital back and forth without any capital controls. But let's see, State Bank can change its mind. So that's the only risk.
Hopefully they catch up. Okay, one more question. Sorry, I think the interest has peaked on the holdco-opco structure. So Shakir wants to know, how do secondaries work? Secondaries happen in the holdco-opco structure. Does the holdco sell mirror down back to the opco? I'm hoping the question is clear, because I'm not educated enough to interpret it on my own. Sorry, that's it.
No, so once you think of the holdco as the master kind of share roster, right? Where what will happen is, once you create the holdco, everybody in Pakistan on the opco, let's say so let's walk through how this happens, right? Okay, so I'm 100% Pakistani domiciled founder. I create a company and I start off with just a SECP registered company. That's kind of effectively the main company. I get some investors, they want to write me a $500,000 to $1 million check. They say, hey, why don't you create a holdco? So at that point, what happens is you create a holdco in Singapore. Then the Singapore holdco applies for the acquisition, 100% acquisition of the Pakistani old company, which would then now turn into an opco. At that point, the SCCP gets involved. They say, okay, that's fine. At the same time, the founders, the local founders or shareholders in the operating company would apply to get mirrored up to the state bank. Via the state bank, they would get mirrored up to the Singapore holdco. So now everybody is sitting at the top in the Singapore holdco. So now if a secondary happens, that exchange, so now there's two types of secondary, right? One is, let's say the company, I mean, if a company is selling shares, it's usually just going to be, like an investment. But if, let's say, an investor or a shareholder in the company, like the founder, if they're selling shares, then they would receive the funds. So now if you're domiciled in Pakistan, when you receive the funds, you are required to actually repatriate them back and then pay the associated capital gains taxes, long-term capital gains or short-term on it. So it's, I don't think it really, I mean, you'll never really get involved in like holdco selling back to the opco, at least from, I can't think of any scenario in a secondary where that might happen, unless you're maybe the company is buying back a shareholder, or there's some sort of a venture debt scenario later on, where the company basically is taking on venture debt to buy out some of the early investors. I see that all playing out at the holdco though, not at the opco level.
This is more on the theoretical domain, I think, the question. Excellent. Okay. Time has flown by. We're probably in the last couple of minutes. So Jan, coming back to Aspire, and I mean, Raj has kindly shared. So one thing for all our audience, Park Launch is privileged to announce its partnership with Aspire as well. You may have seen some marketing about it earlier. We are looking at different ways to make sure that the community which is connected on the Park Launch platform, they can benefit from the expertise, through this panel or even products. So I believe, Jan, you guys have agreed to offer some really attractive incentive to any people, any founders who would like to avail incorporation in Singapore and banking through Aspire as Park Launch members. Maybe you would like to briefly talk about that. I have it here, but maybe coming from you, it will be better.
Sure, I can. Yeah. So I think what we have agreed, and Raj, correct me if I'm wrong, because Raj is in the call as well, is basically for every startups in Pakistan that is incorporating company with us and raising over 100K, the incorporation will be free, right? And if you use another company, but you use Aspire to receive your equity injection, we're going to give you a rebate of $1,500. So that's on the incorporation part. Then on the banking part, I would say we offer higher cashback. Right. So usually there's a 1% cashback that is offered to all our clients. We agreed, I think, to offer you guys up to 5% cashback on pretty much all your marketing and SaaS spends. And last but not least, there's a bunch of perks, especially if you're a new founder, that we offer up to like 50K, basically like a huge discount on AWS, Slack, Notion, pretty much all the software that you're planning to use and that you're going to use as startup founders. We offer like a bunch of discounts, right? So that's really as well the aim of Aspire, is really to become an all-in-one and one-stop platform for every startup founder that is planning to scale the business.
Oh, thank you so much, Jan. And Raj, obviously he's been assisting and articulating these. I think this is a fantastic opportunity, guys, for if you want to avail this discount, which, as Faisal said, at early stage, I think it could be a pretty sizable saving, right, for year one, where you're looking to maximize and put every single dollar you can on growth rather than funding the operation on the back office side. So it can all add up. We will be posting this promo on our portal as well, and you will see it right now. The link, if any of you guys want to avail this promo, and you can apply through the Park Launch promo page, it's already in the chat window. We do, of course, encourage you to avail it because this is a couple of $1,000, which could be quite handy at an early stage for you guys. And I think today, as we talked about Singapore and its ease of business, and in the future the taxation incentives, etc. Of course, Jan, Raj, and other members of the Park Launch community are available to facilitate any conversations you may want to have. The platform, of course, exists to connect these different dots, so you can benefit, and especially the Pakistani ecosystem can benefit from such services. I really like, I think, what happened at the Park Launch conference that we had a couple of months ago, where I believe either it was you, Faisal, or Atif, or somebody said that if you if you do well enough, regulation and government policy and other things tend to follow, right? They only become bottlenecks if you get entangled in it. So I think as a total community, whatever we can do and avail partnerships like this, they will only help create that virtuous loop where the government policy and regulation hopefully also follow suit. And I think for those of you, by the way, just on the closing remark, the Park Launch Startup Portal is also now up and running. You will be seeing some few posters and announcements in the coming days. So all the startups who are looking to do and raise funding at an early stage, we have launched a full-fledged user journey that you guys can benefit from. And then sessions like these is just to make sure that all different aspects, all different facets of that journey are covered, incorporation, taxation, banking, and of course, there's a lot more to come in the pipeline. So you look out for those every week. Jan, also Raj, helping out in Singapore, thank you so much for your time that you took. I'm hoping you guys will be okay if some of our members reach out to you for specific questions. And Faisal, always a pleasure listening to you for decomplexifying for us what is quite daunting sometimes. And once again, thank you all for dialing in. I'm happy to close right on the dot. Have a great next week, guys. Thank you very much.
Thanks for having us. Thank you.
Thanks. See you guys. Bye-bye.
Bye-bye.
Thank you.